Hello everyone, and thank you for tuning in to the update with Oakwood Financial Group. I'm Joshua Dobi. Really do appreciate your continued willingness to be involved in this medium during this time of COVID-19. Frankly, I thought that we would be beyond it by this point whenever things first started back there in March, as a lot of the expectations were that by Labor Day, we would be beyond it and be, quote, back to something a little bit more normal. That has not turned out to be the case, so I really do appreciate, in lieu of more opportunities to see you in person and to connect in those more intimate kinds of ways, that you're engaging this medium as well. I hope this continues to find you healthy and well during this time, and hopefully you're beginning to prepare for the Thanksgiving holiday, albeit I'm sure it's going to be a little bit different than what other Thanksgiving holidays have been. But again, thanks so much for your time, and because I'm very sensitive to that, let's go ahead and dive right in. A lot has happened, continues to happen here in very dynamic ways, not the least of which is the end, thankfully, at least on my end of things, of the formal election season. Now, we still have some things that are outstanding out there, especially the runoff races for the state of Georgia, senatorially, which are going to happen actually all the way out in January, if you can believe it. The way that their state constitution reads, and how they have to have their senators have at least 50% of the vote, and that is a state-specific kind of thing to Georgia, and they're going to need to wait until January 5th for that runoff, and then for those races to be decided then. But by and large, although there still is some discrepancy and disagreement that's out there, by and large, the season is behind us, and we're starting to begin to see what the next season for us politically is going to look like. Now, nothing's real until it's real, so we're not going to give any formal kinds of thoughts until everything is finalized. Now it looks like the second week of January, but we're beginning to see it. And so we're beginning to put some thoughts together. Does it mean things need to be radically different? Not necessarily. Is it okay to make tweaks and adjustments in the meantime, or as a way of changing strategy a little bit, maybe to protect against some downside? It might be. It depends upon your particular situation. Everybody's situation is unique and is different. So it's not true that just a blanket idea, because this is happening, everybody should move in this way. It's always very, very unique. I've talked with many of you, but I'm always happy to chat with you as well to talk about whether any tweaks should be made or whether we should do anything differently. But again, a lot has transpired here over the last couple of weeks. It looks like at this point, obviously things can change, that we're going to have a divided Congress as things sit right now. And I know it may seem a little bit counterintuitive, but historically speaking, that tends to be a good thing as far as the markets are concerned. Not saying it's going to be true for this time around, but looking at it in an historical context, having a divided Congress is actually usually pretty warmly received by the market. So we'll have to see how that takes its shape. Frankly, I've been encouraged by the ways the markets have sustained since Election Day. We thought there may be a little bit more negative volatility than what we've seen to this point. So it's been good to see those markets maintain, and some of them have even bumped up a little as far as their numbers are concerned since that time. Does that mean we're just going to go straight up from here? Of course not. It's just an indication, though, that since that time, there's been some level of stability, but again, anything could be out there, and we always want to have reasonable expectations for what comes next, never making our plans just for what's going to happen in the next couple of weeks or a couple of months, but rather stay focused on the goal. So again, I hope this finds you all well. From a macroeconomic standpoint, a couple of things to keep in mind, a couple of things that we're watching on this end of things. Unemployment figures. Never a very enjoyable subject, especially when unemployment happens to be at the levels where it is right now. And the encouraging thing, though, or the glass half full idea that's behind it, is we're starting to see those numbers in terms of new claims and in continuing claims move in a downward direction, which is a positive thing for us from an economic standpoint. So I'm very thankful for that. We are having some hiccups along the way, both in terms of not just new claims, but continuing claims, and also folks who are moving off of the state unemployment rolls and onto the federal unemployment rolls. For those of you who may not be aware, there actually is a federal program which has been put in place as folks are falling off of the state unemployment rolls, because unemployment insurance, just in case you may not know, is actually a function of each individual state in, quote, normal times. So that continues to be in place, but there now is a federal program due to COVID and due to the CARES Act, which was put in place earlier this year, which actually allows for an additional 13 weeks of unemployment insurance above and beyond what would normally be granted by your state if you qualify. And so we're seeing folks who are moving off of the state rolls, but we're seeing folks rotate on to the federal rolls. Now, those federal rolls are only 13 weeks no matter how you qualify, so that doesn't last in perpetuity either. And so when we put all of that into the proverbial soup, if you will, it's encouraging in that we're nowhere near the spikes that we were earlier this year, but we're still significantly above normal. And so it's going to be interesting to see what Congress does here over the next couple of months with regards to the next legislation. So you can tell by my saying that, even though I've said this now for several updates in a row, Congress hasn't passed any new legislation yet. Frankly, I don't know. I thought it would have been done long before now, especially if you've been listening to my previous updates. I thought this would have been in place. It's not. I don't have a clear indication about when it's going to be in place. We're in what's sometimes called a lame duck session as far as both the Oval Office are concerned and Congress. So it's a little bit hard to see what the motivation may be. It can shift. At this point, nothing is moving quickly down the pipeline, but certainly if that changes, we're going to bring that information to you. So stay tuned as we'll bring that information about what that next round of relief legislation may look like as it happens. All right. So we got some macro data points with the unemployment figures. How about economically speaking, where are we? Well, if you would just look at the data which are being distributed over the last couple of weeks, you would think that we are just going at great guns. Well, the reason why is because a lot of those data points, especially with regards to GDP growth or gross domestic product growth, are a function of relationship to numbers that we received a quarter ago. So we had this huge V down in terms of economic growth last quarter. So we had this huge V up on a relative basis, but we're pretty much back to where we were about a quarter and a half ago. So still very, very much below the, quote, normal growth rate of 2 to 3% from an economic standpoint. We're still significantly below that economically, even though if you look at the most recent quarter-over-quarter data, you would think that things are going at great guns. Well, a lot of that has been a function of the legislation which has been passed and the encouragement to employers to hire folks back. So I don't want to say that it's fictitious in terms of the numbers, but definitely take it with a grain of salt. We still have a long way to go from a recovery standpoint. We still have a long way to go until these government mandated reductions and closures of businesses and of, in some cases, whole industries actually begins to get its foot off the brake. Once that happens, underneath economically, things still look pretty good in my universe. I'm not going to say that we're just going to take off like a rocket ship as soon as the restrictions are lifted. However, the kinds of data that we watch internally here, really far into the weeds as far as monitoring is concerned, those things continue to be very positive. So I'm encouraged by that. I think that's a very healthy kind of thing. Very, very different from 2008 and 2009. 2008 and 2009, we had structural issues from an economic standpoint. Here we have, again, a mandated government reduction or mandated government shutdowns as far as industries and business are concerned. As that releases, we anticipate that economically, that as we sit today, that things are still going to be very healthy. Which brings me back into another point, which a lot of you are seeing and experiencing now, and something that is still a big bogey or a big unknown out there that we don't know. And that is that a lot of states are seeing notable increases in COVID-19 infections, and there are states which industries, schools, etc., inside of those states which are beginning to pull back again. Do we think it's going to be the same hard shutdown that we saw in March and April? At this point, we don't think so, but we don't know. We definitely are seeing a lot of states walking back some of their easements their easements as far as lessening the restrictions in their particular states, business-wise, school-wise. They're definitely walking those kinds of things back. We're watching that very closely. What is that going to mean? this point, we don't know. It certainly economically can't be very helpful, but we also understand that they're reacting to the number of infections that they see spiking in their respective states. So stay tuned. We're continuing to watch that as well. If you have school-age children like I do, it seems like every week something is new, and we're just trying to adapt and to shift as those kinds of things shift, hoping that we're going to get to a point where these things begin to lift, which allows an easy segue into the next point. That point is out there. We know that with a fairly high degree of comfort and expectation, because we are seeing, even in this last week, some very significant reports from a couple of the large pharmaceutical companies. Pfizer comes quickly to mind, so does Moderna as well, with some very public reports about some very good results from their late-stage trials on vaccines for COVID-19. Some very, very encouraging data. I don't want to say that it's just a press the button, everything is perfect again, but some very, very encouraging data as far as the efficacy of their particular vaccines. I think that's going to be a good thing for us, not only from a public health standpoint, obviously, but then economically and financially for our country as well. So stay tuned to that. There's still a runway. Meaning it's not just true that we just ramp into immediate production and immediate distribution and sunny days are here again. There is a process. I mean, just think about it. We have several 100 million folks in our country alone. And then when you look at it worldwide, you're talking about billions with a B. So you're talking about a significant number of folks who need to be inoculated whenever this vaccine comes true. And then it's also going to be a possibility of several vaccines, because several companies are working at it all at the same time. So we're going to need to be mindful of efficacy and whether those particular vaccines are for certain people, perhaps those infirmed or with other complicated conditions. A lot of factors there. I am by no means a medical or public health expert, but a lot of different lines that need to be crossed in order for us to get to that space. So stay tuned, but some encouraging kind of reports. And obviously the market was very, very appreciative of that as an indication about where things are moving. All right, market-wise, as I mentioned there, markets have continued to be very resilient. And now when I say resilient, I'm looking at them as far as the most popular indexes are concerned. Dow Jones Industrial Average, S&P 500 Index, NASDAQ Composite, Morgan Stanley EFA International Index, those kinds of things that are most pulsing through our television screens on the nightly news, telling us about where the market is. And if you would just look at the indexes, you would feel pretty good about where things are right now, especially compared to where we were back there in March and April. But make sure that you peel away the veneer a little bit, or peel away a few of the layers of the metaphorical onion and get a little bit deeper. And I've mentioned this to you several times, and this is very, very important to keep in mind. Yes, the indexes have rebounded a lot, but remember how indexes are computed. When you're looking at the Dow Jones Industrial Average, it's what's called price-weighted or price-sensitive, meaning those stocks which have a higher stock price are going to have a higher influence on the Dow Jones Industrial Average. Even though there are 30 stocks inside of the Dow Jones Industrial Average, it's not true that every stock moves the index in an equal way. Meaning if you're a more expensive stock, you're going to have a greater influence over the movement of the Dow Jones Industrial Average. If you have a $100 stock, it's going to move it significantly more than a stock that's at $30. So very, very important to keep in mind. S&P 500 Index, market cap weighted. If you are a larger company, you're going to have much more influence over how the S&P 500 Index looks than if you are a smaller company inside of the S&P 500 Index. So why is all of that important? I don't mean just to give you a bunch of market analytics as far as data are concerned, but rather to increase understanding as we're looking at our indexes. It's very, very important to look underneath the covers. This is not a broad-based rally where we've been by any stretch. You've heard me say this, and several of you have mentioned to me about the number of times that I use the word bifurcated. It's just one of those 10-cent words that I have that I probably learned back in in ninth grade grammar school to describe a little bit about where we are as a market. And that bifurcation comes in this way. Over here you have a few companies, large companies, often very technology-focused, technology-centric companies who are doing very, very well. You can name them with me. You know them. Netflix, Facebook, Google, Apple, Amazon, over here are doing very well. Have had huge years as far as performance is concerned. but a relatively small number of companies. And then you have the huge number of companies over here which continue to be decimated. And again, you've heard me say this on a number of different updates before this time, but that continues to be the case. I say that not to frighten you or to give you concern, but rather so that you have understanding about what we internally sometimes call market breadth. And with market breadth, with wide market breadth, that's actually a sign of a healthier market. In a narrow market breadth, which is where we are right now, it just means that we're more prone and there's a higher risk of a sharp pullback. And we've talked a number of times about that exact kind of possibility. Does that mean that it's going to happen today, this week, this month, before Christmas? Have no idea. I truly don't, because there are any number of factors in that algorithm which can actually move the markets in those directions. So no way that we can predict that in advance. However, in a narrow market or a market with narrow breadth, we are more prone to that kind of sharp pullback than if we had wide breadth. And if you just think about it, it's just a risk management kind of tool. If the markets are wide in terms of their breadth, in terms of performance, well then if this little portion over here doesn't do as well, you have the balance of the market which holds everything up. However, when you have narrow breadth, when that little portion that's doing well pulls back, then the entire market looks very negative very quickly. So again, not cause for alarm, not reasons for us to automatically just shift everything that we're doing to go do something different by any stretch of the imagination, but rather an understanding about the market performance that we're seeing. And it's very, very important to keep those kinds of things in mind. So again, a little stock market analysis 101 for you there. I'm sure that's the last kind of thing that you'd want, especially during the holiday season. But important that you hear that from us as we're thinking about what comes next, which of course leads to the next multi-trillion-dollar question. And we're getting this all the time, and I understand the spirit of it. What indeed comes next? Well, I'll start with a terrible answer. I have no idea what's going to come next. But in addition to the factors that we've already talked about here, as I mentioned a little bit earlier, and just to expand on that a little bit, we still see some very, very strong indications about where we are as a market right now. And what I mean is very, very different from 12 years ago when we were looking at some crumblings as far as the foundation of our economic security were concerned, due to all of the reasons that you know about the Great Recession in 2008 and 2009. We don't have that today. We have, again, companies and industries which have been mandated to reduce or shut down altogether. Now, as those restrictions are lifted, and I think we see this on certain days in the market responds to that in a very, very positive kind of way because it anticipates those companies are going to go back to, quote, normal ways of doing things. The challenge is that's not going to happen just by pushing a button, and it's certainly not going to happen overnight for all of the public health reasons that we all know very well. So I think it's good to see that. It's good to see those macroeconomic factors and, frankly, microeconomic factors, which still indicate that our underlying economy is in a very, very healthy place. But it's not going to happen overnight. Until we get widespread distribution and then inoculation with the vaccine, we're still going to be in a space, we see it at this point, of some fits and starts. It's going to be very hard for the economy and then subsequently for the markets to get a great surge of momentum anytime before that happens. It will in pockets. We've seen that this year. It doesn't mean that there isn't any possibility for positive returns as far as the market is concerned. It's just probably going to continue to be coming back to the idea of narrow breadth as far as the market is concerned. So just a couple of things to keep in mind as far as the overall markets are concerned, and then thinking about your overall plan. But certainly no reasons to make any dramatic kinds of shifts based upon what's happened here most recently, but just some factors to kind of keep in mind, and then certainly if you'd like to chat about them, always happy to do that. As far as those things are concerned, that's about all that I have for right now. Appreciate your time, appreciate your willingness to, again, to listen to me drone on here a little bit as far as the analytical process is concerned in the marketplace and what we're seeing. But always, at any time, especially relevant to your particular situation, I always enjoy hearing from you. Love to chat and hear about how things are. I hope that you continue to be healthy and well, and that yours and your extended family continue to be in that space as well. And also, if you'd like to chat about other things that aren't market related, I love doing that as well. For all you Steeler fans out there, I mean, this is about as good as it gets. I know I said that in the last update, but 9-0, my goodness. I mean, I don't think even the most ardent Steelers fan, with Big Ben coming back from the big elbow surgery, would have dared to suggest that we might be in there, but things are going pretty well at this point, so let's see what happens. I saw someone for the first time on ESPN talk about the possibility, or what the probability statistics were for an undefeated season, which seems outrageous to even think about that, but who knows? Certainly it's been a fun ride for Steelers fans to this point. But beyond that, please hear from me. Just a very warm word of Thanksgiving wishes to you. I know it's going to be a different one this time around in so many ways, but please hear how thankful I am for you and for your relationship with me and with our group here at Oakwood. We are so very thankful for you. We really do appreciate not just your business, but the relationship that we have with you, and we thank God for it. So we really do appreciate the ways in which that we are connected, even through these digital means, such as it is during this time. Well, friends, that's all for my time with you here today. Always, always, always feel free to reach out at any time. Love to chat with you. And until the next time, I'll look forward to talking with you soon.